Welcome to Business with Louis, the show where we explore the world of entrepreneurship and help you turn your ideas into reality. Today, we're going to talk about a crucial concept that can make or break your business: business entity types. As an entrepreneur, choosing the right business entity type is one of the most important decisions you'll make. It can affect everything from your tax liability to your ability to attract investors. But what exactly are business entity types, and why do they matter? In simple terms, a business entity type refers to the legal structure of your company. It's the way your business is organized and recognized by the law. There are several types of business entities, including sole proprietorships, partnerships, limited liability companies, and corporations. Each type has its own advantages and disadvantages, and choosing the right one depends on your specific needs and goals. To understand why business entity types are so important, let's take a step back in history. In the past, businesses were often structured as sole proprietorships or partnerships, which offered little protection for owners' personal assets. But with the rise of modern capitalism, new business entity types emerged to provide greater flexibility and protection for entrepreneurs. One of the key principles underlying business entity types is the concept of limited liability. This means that your personal assets are protected in case your business incurs debts or liabilities. For example, if you're a sole proprietor and your business goes bankrupt, your personal assets could be at risk. But if you're an LLC or corporation, your personal assets are generally protected. Let's look at some real-world examples to illustrate how business entity types play out in practice. Airbnb, for instance, started as a sole proprietorship but later converted to a corporation as it expanded globally. This allowed the company to raise venture capital and invest in its growth while providing limited liability protection for its founders. Another example is Walmart, which is a publicly traded corporation. As a corporation, Walmart has access to a large pool of investors and can raise capital more easily than a smaller business might. But it also faces stricter regulations and reporting requirements, which can be time-consuming and costly. Research has shown that the choice of business entity type can have significant implications for a company's performance and survival. A study by the Small Business Administration found that businesses structured as LLCs or corporations tend to have higher revenues and employment growth rates than those structured as sole proprietorships or partnerships. So, what are some practical applications and tips for our listeners who are looking to start or grow their own business? First, it's essential to consult with an accountant or lawyer to determine which entity type is best for your specific situation. Second, think carefully about your tax implications and how they might impact your cash flow. Third, consider the level of control and flexibility you need. If you want to maintain complete ownership and decision-making power, a sole proprietorship or partnership might be suitable. However, if you're looking to scale quickly or attract investors, an LLC or corporation might be a better choice. It's also important to remember that your business entity type is not set in stone. You can always change it as your business evolves. In addition to choosing the right business entity type, entrepreneurs should also consider other key concepts such as business registration, licensing, and compliance. These can vary depending on your location and industry, so it's essential to do your research and understand the specific requirements for your business. Finally, let's talk about some common mistakes that entrepreneurs make when choosing a business entity type. One of the most common mistakes is not considering the tax implications of their choice. For example, if you're a sole proprietor, you'll report your business income on your personal tax return, which can increase your tax liability. On the other hand, if you're an LLC or corporation, you may be able to take advantage of more favorable tax rates. Another common mistake is not seeking professional advice. Choosing a business entity type can be complex, and it's essential to get guidance from an accountant or lawyer who understands your specific situation. In conclusion, understanding business entity types is crucial for entrepreneurs and business owners who want to make informed decisions about their companies. By choosing the right entity type, you can minimize risk, maximize tax efficiency, and create a strong foundation for growth. As my colleagues on Wall Street would say, it's all about structuring your business for success. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.